Hey folks, Dan Frio here with your daily report on what's going on in the markets. So what we're going to talk about this morning is we're going to go over the headlines, and then I'm going to try to put those in to make sense for you guys to figure out what's going to go on with stocks, bonds, cryptos, real estate, gold, cryptos. I said cryptos already, and the whole ball of wax. And then at 3 o'clock today, I'm going to come back live to answer you guys' questions. So if you have a question on, like somebody asked yesterday saying, Dan, what's the ratio between gold and Bitcoin? I got that in today's video. So if you ask, I'll do the best that I can to make that happen for you guys out there. So if you have any questions or things you want me to post, put it in the description down below. I'll try to do that for you so I can at least explain things to you. The funny thing is yesterday is we had a call from a friend of mine who their son-in-law works at Silicon Valley Bank, is a bond trader. And she's like, I really wasn't understanding what was going on. And then she called and said, I watched your video and now this all makes sense. So thanks, guys. I appreciate you doing that. And that's the reason why I do these videos. So what you're seeing on your screen right now is what I see on my screen, or one of my several screens that I have in front of me, and figuring out what's going on in the bond market. Well, you're going to see right in front of you, here's what's going on. So I'm going to put a lot of this into context here at the end of this video when we go over mortgage rates and what my assumptions are, what's going to happen in that realm. But let's get over to the economic calendar so we can figure out what's on the agenda today in the economy, at the stock markets, on the other markets, so we can get an idea of, where things are going to go from here, because it's a catastrophic. Events are just occurring every day. It doesn't seem like we just keep getting beat in the head day after day after day. Wouldn't it be nice one day just nothing happened? That's not going to happen in today's world. But here's what you're seeing on your screen right now. We have building permits. Building permits came actually up, and I didn't think they would go up. I knew builder sentiment is up a little bit, and I know you guys don't see a lot of these readings, and you'd say, how in the world is builders' confidence up? It is up a little bit from where we ticked in last time. So, and it's proving itself right here. Again, we have building permits. The last reading was 1.339 million. The expectations were to come in a little bit lower than that at 1.34. It actually came in at 1.52. So that's good. We're having a little bit maybe more inventory, but these are building permits. These aren't going to come to market probably through 6 months to a year from now. So that's what's going on there. We have initial jobless claims. This is the area that the Federal Reserve's like, okay, we're going to people are going to take a hit at their jobs because we're probably going to go into a recession, and we need people to stop spending, and we need people to stop making so much money. This is the Fed, not me, guys. I'm on your boat. I want the stock market to go up. I want my pay to keep going up and so forth. But they're saying this is the problem right now in the economy that's driving up inflation numbers, and that there's a lot there, but we'll unpack that at some time as well. We have the Philly Fed Manufacturing Index. It actually came in the previous month at minus 24. I said that came down minus 24. The economists thought it was going to come in at minus 15, a little bit better than expected. It came in almost exactly where it came in last time, minus 23. So a lot of this isn't really going to play a big role in today's market. So let's skip over that piece of the equation. Let's go to the headlines. I'm using Yahoo Finance. If you guys want me to use some others, or you think there's a better site, let me know down below and I can start using multiple sites. I kind of boycott in CNBC a little bit because their biases are out there. I'm trying to give you guys content without any biases and without any, I'm not left wing, right wing, or whatever. My goal here is just to educate you guys on what in the heck is going on. So you're seeing right here the indexes all through across the board. We got the S&P 500, the Dow 30, and the NASDAQ. They're all up. They're not up huge, but I'd rather see this in the green than in the red. But all over headlines, here's what you're seeing. Yellen tells Congress our bank system remains sound. Under that, Credit Suisse just unleashed nightmare for the Fed. So don't you see a lot of contradiction? One person saying everything is peachy, the other headline saying, okay, we just unleashed havoc on the Fed. And then we see Goldman Sachs, it boosts their recession outlook, and they slash the GDP forecast. What is GDP? Because you might say, okay, what's GDP? It's the gross domestic production. It's how much we produce in the United States. So what the expectations were is for GDP to kind of come down, and that's would push us into a recession. So what happens in a recession, a lot of times people lose their jobs because there's not as much production, there's not as enough need for products, and then that pushes that down, and then it pushes everything else down. Okay, and with the benefit here too, though, is on the flip side of the coin, let's look at the glass half full. In the last 5 recessions we had mortgage rates drop at 1.8 from down 1.8% from the level that it was at when the recession started. So let's just say, if we stand to norm, rates could be at least 1% lower, maybe 6 months or a year from now from where we're seeing today. And at the end of the video, I'm going to go over where mortgage rates are. So then you can start going down through here. Yellen's testifying in front of Congress and everything else. Berkshire Hathaway boosts stakes in Occidental Petroleum. A lot of people are moving out of bank stocks right now that were kind of a safe haven and provide pretty good yields to investors. And they're moving over to oil companies and energy. I did that recently. I'm not a financial planner. I don't do this for a living. I don't have a license. I'm not asking you guys to follow my trades. I'm just doing this for educational purposes and letting you guys know what I'm doing. So I sold some stocks recently and I moved those over to some petroleum companies, not really petroleum, energy companies with really nice yields. I found a couple fertilizer companies. One that's doing fantastic is actually keeping up with the S&P 500 over the last 6 months or so, but its yield is like 18%. I might share that with you guys one day. But I don't want it to be like Reddit or a lot of pundits on, CNBC and all that they're concerned with. They don't want you to, they don't want like Reddit. When Reddit last year pumped a couple different companies, they pumped them and dumped them and whatever. And then Wall Street had a huge to-deal over that. They're like, this is BS. You can't do that. What do they do all day long? They have people that represent like the CEO of a company coming in just trying to pump their stocks and do everything else. So, Reddit and CNBC, they're both great systems, but I'm just going to give you my personal feedback because this is one-on-one and I'm just the average person out there, and I'll let you know what I'm doing behind the scenes. So I sold off on some of my stakes and things, and I put them into higher yield products because I just want yield at this point to protect myself. So let's get over to the next thing. Bitcoin. Somebody asked, what's the variation between Bitcoin and gold? Well, this is one of the things I found. Let me get my head out of the way. And you can see it here, right through here. You can see down through here. If you invested in gold, here's where you would have been from 2010 to now. Okay, this isn't me, guys. This is whatever website this is. It is in charts.woolbull. I'll leave it up here, right here. This is the site I went to. So here's what happened with Bitcoin since 2010. Up, and away. The Bitcoin per ounce of gold, right through here. So that's basically the variance between gold and Bitcoin. I do own actually both. I own an ETF with gold, and I own some stocks. It's like an ETF with Bitcoin, and I do own some individual Bitcoin myself, just to disclose that to you. So I'm not telling you guys to buy this stuff. I'm just giving you the information that I want, basically that we find on our screens. So that's where that is, and that's just because somebody asked me for that. But what I want to get to now is what in the world's going on with mortgage rates. So they are all over the map, just like the stock market is. So we see right here, the MBSs are up 5. What does this mean? So for those that watch me every day, please give me 1 minute to finish this, and then I'll conclude the video with some different things. But right here, what you're seeing on your screen is the price of a mortgage-backed security bond. Okay, this is the bond that trades that you should track if you want to track mortgage rates. If you want this subscription, it's down below. If you want to subscribe to my subscription, which I don't sell the data and I don't do anything really with it, just it's their educational purposes for you and it's free. Subscribe to my system newsletter down there. You're going to get this. You're going to get charts like this. Hold on 1 second, like that. And you're going to get a whole bunch of insight in this mortgage business. If you're a mortgage loan officer or a realtor that really want to dive in on this stuff, I do have MBS Live, the link for this down below as well. So these are all tools that you guys can use. So this is what's going on in the MBS market right now. Let's refresh it to make sure we are current. It is down 2 now. So we were up 5 and we were down 2. This is the reason why I really don't use this system, Mortgage News Daily, because it doesn't give me live feed like this is. Look at this. This is 5. And if you're on here for a minute or two, you're going to see this start to click through because this is a live feed. Let's get over to where mortgage rates are, because that's probably why you're here in most cases. Just let's follow this stuff. Where mortgage rates are, this is the top 6 products people use when they're trying to get a mortgage. So guys, this is the national average. What I want to explain to you on this is Mortgage News Daily, what they do is they survey lenders all over the country on specific, on a specific criteria, like a specific credit score, loan amount, loan to value, and so forth. That's what this is. Your scenario might not be this, but what I'm trying to educate you guys on is the trend that this is taking place. Are rates actually going up? So if you got approved, and let's say your credit score was a little bit low, and you weren't putting as much of a down payment down, so your rate, is 6.875, let's just say. But today's rate is, I'm saying the average is 6.55. So that means your rate is 0.3% higher than what you're showing on here. Well, that might be because of your credit score is lower, your loan to value is higher. You might be buying a condo where this is basically representative of a single family home. There could be all kind of reasons why behind that. What I want you to understand is, okay, today the average rate 6.5, and you're getting 6.875. So tomorrow, if you see this rate go up, well, then add the differentials on there. So you might say, okay, the average rate, my rate is 0.375 higher than the average rate. So then you can start tracking it this way. So just because this rate here is 6.55 and you get a quote at 6.75, you're not getting ripped off. You're just getting, there's an adjustment for some reason in your loan criteria. So that's that part of it. And then I want to educate you guys, or at least let you know when the Federal Reserve's next meeting is, because that is, everybody's on pins and needles trying to figure out what in the world is the Fed going to do because of all this news coming out, especially about banking right now, where they're going to be meeting at the end of this month on January 31st to the February 1st. Then they'll come out on February 1st and tell us what they're going to do. In the meantime, on my news channels, I'm going to try to educate you guys on what the expectations are, why they're going to do what they're going to do, and the future outlook. So that is our report for today. If you find value in this and entertainment value in this, all I ask you to do is 3 simple things. Give me a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. Thanks for watching, guys. I'll be back today at 3 o'clock Central Standard Time with my live update for you guys to ask questions in regards to stocks, bonds, real estates, cryptocurrencies, anything you want. And if I know the answer, I will provide it to you with no lenses attached, no bias attached. If I don't know, I'll come back the next day and hopefully answer that for you. So thanks for watching, guys. Take care. God bless. See you in a little bit. Bye-bye.